Welcome back, guys and gals, to the channel. Yes, today we're going to talk about an Australian stock. Yes, for all the people, or even in New Zealand as well. But this stock is Commonwealth Bank. Yes, I have talked about this stock, but not for a long time. So I thought I'd better recap, let you know what's happening with this company. Is it time to get yourself excited, or do you have to wait for it to plunge because it's flowing high? Over the last 5 years, it's gone up 42%. Where is it heading to now? Is it going sideways? Is it going downwards? Are we heading into a recession? Who knows what's going to happen in the future? But this is going to be a stock analysis for you on Commonwealth Bank. We're going to look at key metrics from net profit to revenue, PE ratio, dividend, assets versus liabilities, free cash flow, all the way to return on invested capital, which is one of the key metrics for me, to see where are they actually, when they're putting money back into the business, are they getting the money back out? If not, then it's not a good sign. And anyway, if you stay right to the end of this video, we will give you an option of the possible intrinsic value of Commonwealth Bank. So remember to stay tuned for that one. But we're going to get to it here, right now at Barry Charles, Commonwealth Bank stock. Remember to like and subscribe if you liked this video. Let's get to it. Yes, revenue. Yes, we're going to look at the revenue of Commonwealth Bank at the moment is at 30 billion. Yes, $30 billion is where we're at with revenue. Whether they can continue, that is going to be the question mark. But this was something I saw impressive here. The net profit, 9.6 billion. Very good. 9.6 billion. So they are really going good in terms of net profit there. So that's a very good positive for the stock. But yes, it's just one of those things that they really need to improve their they really need to get going with all that. I think there's work to do with this company going forward, but definitely good. Earnings per share, this is something you got to do your work on here, but it's going to have a 2.92. It's very good. 2.92. Earnings per share, that's pretty good. PE ratio of 17.3, so not a bad PE ratio. Dividends, 4.4. If I got the net profit wrong, don't get me wrong, that seems a little bit big for a bank. I might have got that one wrong. The dividend, 4.4%, which is a pretty good dividend growth. The assets versus liabilities, this was a little bit of concern for me. Very similar, the assets versus liabilities. It was very concerning to me. But yeah, free cash flow is 9.9 billion, so they're doing okay there. They're doing pretty good, but they were at 32 billion before in 2021, so that's something you need to look at in terms of investing into Commonwealth Bank. And yeah, the long-term debt wasn't too bad. So yeah, the long-term debt's just something they have to continue to work on to get that down, but it wasn't too bad for my liking. But the returning on that invested capital of 2.9, oh geez, not good there, but banks are expected to be great at returning on invested capital, to be honest. So Commonwealth Bank is one of those ones you got to itch your head about, to be honest. Shares outstanding at $1.67 billion. Down from 2019's values, so that is good that they are starting to give you back some money for your investing. So they are doing some positives. So it's something positive about this company, but it's just a little bit all over the show. To be honest, with the stock, I'm not 100% sure where to go, where to be with the stock. It's very interesting, but obviously the bank itself, where do we need to see improvement for investors? The assets versus liabilities, you want to improve your total assets. For me, it needs to be a big one. Get your free cash flow going up. Obviously, the most important one here is return on invested capital is absolutely no good, and they really need to work on getting that back up. It's a big thing they need to work on. For mine, it's just one of those things. Commonwealth Bank, they just need to do it. Yeah, so they got to work there. Their revenue, they could work to build their revenue up more, would be something to think about. Dividend's pretty good. You can't complain about the dividend. Let's be fair about that. They're giving you a good dividend. But let's now have a look at the intrinsic value using the grams calculator, which you can find on Trade Rants. It basically looks at share price, earnings per share, the growth rate, and the current bond yield, and we get an intrinsic value. And after we've done this calculation, I will have a look at what I think my intrinsic value of this stock is, where it should be from where it is at the moment at $102. Let's have a look. So at the current share price, roughly $102 at the 2.9% earnings per share, you're looking at a growth rate of 5%, you're looking at a $56.50 share. So intrinsic value. So that's the intrinsic value at a 5% growth rate. If you look at a 10% growth rate, you're looking at about $87 is the intrinsic value. And then if we double the earnings per share and boost it up to 5.8, then you're looking at $172 per share stock. So where is, in between all this, where is the intrinsic value of Commonwealth Bank? Now, Commonwealth Bank is not going to disappear, I don't believe. So I don't think you have to worry about that. But my concern is probably the growth rate, where the growth rate comes from. So I'm going to say the intrinsic value for me is around $70 for mine. If I was in a perfect world, because I think you got to drop a bit down for the dividend as well. So I'd say $70, so I would want to be getting it at 35. Now, is that actually going to happen? Highly, highly unlikely. But if we have a big recession, then you never know. If it got down to that sort of stuff. So to me, at the moment, if you want to have, people are saying, I'm going way too low. What are you doing? You're kidding yourself. To me, at this price is just too high. I think if it got down to $80, $70, then you could look at buying it. But to me, it's just too high. If you haven't invested already, to me, I'd just be waiting and seeing, waiting for it to drop more, because I don't see a huge upside. Do you think they're going to double their earnings per share? I don't see that happening either. So, well, not in the near future. You might be waiting 20 years for that. Yeah, to me, it's an interesting stock to look at. But to me, Commonwealth Bank is a no. I think it's a solid business. Don't get me wrong. You can get small gains each year. If you're happy with small gains, then go ahead. It's definitely not the worst stock out there, but it's definitely not the best either. A solid stock, Commonwealth Bank. If you're looking for a solid Australian stock, there's nothing wrong with the stock, in my opinion. But to me, it's not my investment. But it's not. Do your own research. Not financial advice. Just because I don't invest doesn't mean you can't invest into the stock. It's up to you. Totally up to you. But do it at your own risk. Anyway, that's just a little bit of a looking at the intrinsic value and the stock analysis of Commonwealth Bank. Hopefully it's just giving you a few ideas about the stock and where the price ranges are at the moment. But anyway, I hope you enjoyed the video and have a great day out there. Remember to like and subscribe.